This is my Freetrade Portfolio update for June 2022. Hi, this is Mosh. I'm an amateur trader and investor. If you've been with me from the start, you've seen every month I've done a Freetrade Portfolio update. So let's get straight into it. Now, I do have a fear that a recession is looming, and I think we'll hit a recession in 2023. So I'm being very careful with my investment picks. I'm trying to pick stocks or indexes that I know will do well in the long term rather than the short term. And my free trade portfolio is made up of high dividend yield stocks, and they generally tend to do very well in a recession or in a market downturn. So compared to last month, the value of the portfolio has not moved much. The reason is because there's a couple of growth stocks in here that I've just added in that are absolutely tanking. So let's start off with the first one then. It's the Footsie All World High Dividend Yield. And you can see it's up 10.6% from the point I bought it at. Now, if we look into the Vanguard Footsie All World High Dividend Yield, you can see it's made up of 1,775 stocks. So you're massively diversified. It has a very low charge of 0.29%. If we actually look at what it's actually invested in, so you can see the yield at close of 30th of April 2020 was 3.25%, which is a very healthy yield. And bear in mind, the index has gone up 10.6%. And if we quickly look at what actual stocks are in here, you can see about 46% makes up North America, 25% makes up Europe, you got the Pacific and emerging markets, and a few in the Middle East. So if you scroll to the bottom, we can see this is the main top 10 companies that they've invested in. So Johnson & Johnson, again, we know medical companies and cosmetic companies do pretty well. Okay, Procter & Gamble, ExxonMobil, petrol, crude oil is at a ridiculously high price at the moment, so they'll be making money. Nestle, again, a worldwide food maker, so that should do very well. JP Morgan & Chase, banking, Home Depot, Chevron, Pfizer, and we know Pfizer doing well. AbbVie, again, a lot of medical companies that you can see along here. If we go to the next page, you got Coca-Cola, you got Pepsi, and they are very stable stocks. They don't really move much. They're not that volatile during a downturn, during recessions. You got, again, Shell, which is another energy company, where energy companies are doing really, really well. You got Samsung there as well. And you can see from my portfolio that they're paying me £2.14 on the 30th of March. The next one, we have AT&T. Now, AT&T last year was absolutely tanking, but it's starting to return. You can see I'm up plus 2.31%. Now, if we look at some of the financials and look at its historic dividend, you can see it pays an amazing dividend. May the 2nd, its dividend yield was 5.67%. So this is one stock that I'm going to keep on buying because telecoms are not going anywhere. Even there may not be much growth in AT&T, it's not going to go bankrupt anytime soon, and it's still going to be bringing in that money from its large customer base. Next on the list, we have the Global Clean Energy ETF, also with the ticker symbol INRG. Now, if we look at the INRG, they do pay a dividend, but it is relatively small. This is mainly made up of growth stocks. And you can see I'm down 4.88%. So if we go to holdings, you can see all these holdings are basically tech companies, like Vestas Wind Systems, you got Plug Power, Sunrun. These companies were doing amazingly well last year, then they tanked because they're all growth companies. But for me, this is long-term investment. I think in the next 10-15 years, this is going to do amazingly well because we have to move away from fossil fuels. Next I have is the S&P 500. I actually bought it during the high of last year, and I've sort of started averaging down on it. It's minus 11.83%. Now, that should give you an indication that the high dividend yield stocks are doing well, because underneath it, you got Telefonica Brazil. That's up 46.64% from when I bought it, which is amazingly well. Now, Telefonica Brazil, if we look at its dividend yield, so we go to the financial, We go to the dividends. You can see May the 2nd, the ex-dividend date, 6.08% dividend yield. That is remarkably good. And the stock has gone up 46.64%. So that should be evidence that high dividend yield stocks work during a looming recession or during a downturn, because these are companies that make money. You can see Uber, I really like Uber as a company, but it is massively taking a hit. It's down 44.8% since when I bought it, and it's a growth stock, so they pay zero dividend. The last one I have is ETP, is up 62.58%. And you can see I've got an order in for Civitas Social Housing REIT, because this has again an amazing dividend yield. Here on Freetrade, 6.69%. Obviously that might not be completely accurate because it depends on the price at now. And you can see it's starting to tank a little bit, but it pays a very good yield. And I talked about Civitas Social Housing REIT when I done my top 4 REITs to buy to beat inflation. And lastly, remember, if you want a free share worth up to £100 with Trading 212 or Freetrade, definitely go use my link in the box below. Deposit £1, open up an account, and you'll get your free share. I'll also appreciate a like and a sub to this channel. Thank you.